Funding is very cheap right now, and I think it's going to continue to stay cheap. I think that for the investment grade large corporates with large cap, it's a very good time to be picking up cheap assets, to be buying smaller companies, etc. And the corporate bond market, investors are all flocking there. It's a flight to quality play right now. You've got equity markets so volatile, you don't want to have all your money in cash or just treasuries. The yields are too low. It's burning a hole in their pockets. So we're seeing investors just flocking into investment grade corporate debt, and the floodgates have opened.
Are you worried about the amount of issuance? Some of the numbers being quoted, about $280 billion in investment-grade corporate debt could come to the market in 2016. Is that too much for investors to soak up in a risk-averse environment?
Well, you know, we've had 4 record years in a row in the U.S. dollar corporate bond market alone. So I don't think that if we match those levels or went slightly higher, which is what UBS's outlook is for 2016, I don't think that would be something that investors couldn't handle. I think if you saw a real turn in equity markets or you saw other asset classes open up, then it could be a question. But right now, where else is an investor to put their money that's safe?
We don't know the details around Premier yet, whether a deal's going to be done and how it's going to be done, whether it will be debt funded. But if it does become a debt market deal and it's here in the UK, of note is the fact that the snooze button was hit on the sterling corporate bond market this year. It really failed to get into action, and Brexit's already been cited as one of the reasons why investors are concerned. If you're going to the corporate bond market here in the UK, do you think there is a reason to be nervous, whether it's Brexit or some other reason?
I think at some point we'll have a better idea about that. It's all evolving. People are forming their opinions around Brexit. So I don't think that's quite resolved yet. But one thing's for sure, that corporate bond investors in sterling are asking for paper. So every time we speak to clients and they're saying, is it really real, the sterling market? It really has not had much supply. And is it that investors are just not competitive enough and the funding not competitive enough? We're seeing that actually that's starting to change. So you saw issuance already. You saw Nestle issuing in sterling yesterday. We're going to continue to see today, now that we have markets stable, more deals coming in the sterling market. And of course, we've already seen financial institutions access that market. For investment grade corporates, I think it's quite likely that you're going to see sterling market be an important part of that funding. But I'm talking about investment grade. I think the high yield space is going to be a big challenge, which is the sector you're talking about with Premier and Tullow.
And on the non-investment grade situation, it's quite striking to see that on the equity side of those businesses, nobody wants to hold them. Even though we have a context of much cheaper financing, effectively the lenders do require huge spread, and we could see along our system that those stocks which are issuers and are not investment grade tend to underperform in the context of lower risk-free rates. And that is fascinating because it shows that the risk is ahead, i.e. the oxygen that you would expect from cheap financing does not happen.